Good Tuesday afternoon to you. Welcome to the Jon Sanchez Show on News Talk 780 KOH. It is a pleasure to be with you and a pleasure to be with my co-host. Around the horn, we shall go. Dwight Millard, Highlands Mortgage. How are you, my friend?
I'm doing fantastic today, John. How are you?
Very good. Very good. Mr. Cory Edge, Edge Realty, Big C. That's a good word.
Well, my market didn't go down today, like
Yeah,
real
right.
estate.
Exactly. Hey, but
At
you had
least
kind of a
not that I know of, at least.
scathing report by the Reno Gazette Journal about our local housing market this morning. Did you see that?
No, I didn't see that.
Yeah. Yeah.
I pull that up. I
Yep.
usually see those.
It was not encouraging, but it was all the same data that we shared. What was that, last Thursday or whenever it was that we did the local report? So they were kind of regurgitating a bit, but the way they put it, it's like, holy moly, I'd be scared to death right now. So yeah,
Well, there's a lot of, I'm sure you've seen, there's a lot of stories coming out of Las Vegas, not only tourism, but housing way down, prices way down, inventory up.
do you think those are true? I see those on YouTube, especially the tourism one, and I'm like, is this like some fake AI things? But it doesn't sound like it according to you. You think those facts are true?
I mean, I get it from, I think there was something in the Wall Street Journal and the public, like, if you can believe what you read, then
Yeah.
it is. I don't
Okay.
really watch the videos and the rest of it, but,
Huh.
we'll see.
Yeah. Only time will tell. All right, Mr. Millard. A lot of today's program, my friend, is all going to be about you. I hope you got a good night's sleep and you're ready to go.
I'm ready. Always ready.
Always ready. There you go. All right, let me tell you what we do have lined up for you. Once again, thanks so much for joining us. We do appreciate it. We're going to recap today's stock market activity. A little bit of a rough session today, especially if you have some tech or anything related to the NASDAQ. We had a few problems there today, and I'll give you all the reasons behind the weakness in the NASDAQ and the S&P and the reason of a very small gain in the Dow. We'll go through that, of course. Then we're going to get into our topic. So here's the question that many of you are facing right now, and that is this. Should you buy now and refinance later, or should you wait it out? Right? Those are really the two options that many people are looking at in regards to going out and purchasing a home at this point. So what we're going to do this afternoon with Cory and Dwight is we're going to weigh the payments. We're going to look at the inventory. We're going to talk about negotiating and what is involved with that right now with Cory. And then, of course, Dwight's going to chime in on the financing side, because this is another area that we've got to get really creative right now. We're going to talk about buy downs, some credits, and, of course, the smartest contract terms in today's market. So we've got a lot of things, but the goal of today's show is really simple. Rates are coming down. And you know what, guys? Let's see. Where the heck did I watch this? Oh, it was on CNBC this morning. It was with Diana Olick, their real estate reporter. And she was interviewing somebody. And it was like deja vu. We had just said this. And what I'm talking about is the person that she was interviewing was getting into a discussion about, the rate buy downs, and so on and so forth. And what a challenging market it is for so many people. Everything that we've talked about, the qualifications for the younger, the first time, or maybe the second time buyer, the buy downs and how it's putting a crunch into many of the home builders. And just, again, a reiteration of everything that we've been talking about. And again, this was on a national basis. And I thought it was really interesting to see or hear that on a national basis, that we're not in an island here, folks. A lot of times we're supported, of course, by the strength of California housing market. But again, this is a problem right across the board. And Dwight, they really got into about the new home builder buy downs and how it's difficult for someone just selling a home to compete against those buy downs. So that's kind of what prompted me to create this topic today. And we're like, there's a lot of things going on that people are facing at this point. How do we help them put it all together to help make that decision? And it really is, obviously, it's both of your worlds there.
Yeah, you're exactly right, John. You've taken everything we've talked about for probably the last 6-8 months and put it on one sandwich, right? I mean, it's one sandwich. Everything the borrower is faced with right now, it's extremely difficult. And on top of that, John, you get people now that are getting their wages cut, they're getting their hours cut, and they're moving them to 1099s. So, I mean,
really?
Yeah, you're just starting to see every business, every entity is trying to get a little creative now in trying to help, circumvent, maybe an off month or this. So there's just a lot of different dynamics. It's, we talked about it. It's nowhere near what 08, 09 was, but the borrower's feeling some of the exact same pains of 08 and 09, where it's just a credit income challenging market. Has been.
Right. Right. Yeah, that's fascinating. I was not aware about the 1099. So obviously, employers want to put employees, or what used to be employees, as independent contractors on a 1099. That way, they're not paying medical benefits, they're not paying retirement, they're not paying payroll taxes. They write one check to them, and it's up to the what used to be an employee, now an independent contractor, to cover all of their personal overhead, basically, and business overhead. So yeah, that's interesting that you're seeing it on your end, Dwight. Cory, have you heard that at all in any of your conversations?
I haven't heard it from my clients, but I'm helping a friend of mine go through a business acquisition right now, and all of the people that work for this particular business are 1099, employees, if you will, which was kind of interesting to me. Part of me thinks, and I haven't heard this anywhere, so I might be wrong, but part of me kind of thinks with this administration right now, it feels like those kind of rules get a little laxed. People have been fired. The IRS isn't supposed to have as many teeth anymore, and blah blah. Kind of the eyes off the ball. So it doesn't surprise me at all that businesses would think, well, if I can get away with it, now is probably the time I can try it.
Right. Yeah.
John, to add to that real quick, to just add to that, you and I had a conversation, I don't know, a couple of weeks ago. The student forgiveness or the student forbearance programs are over. People are losing 200 points on their credit scores because they're not aware that their payment kicked in January. I've seen now 4 of them that they
Wow.
had 750, 740 credit scores, and they didn't realize their payment restarted. No notification, no anything. They got rolling 90-day lates right now, and they lost 200 points in their credit score. 750 to a 550. John, they can't buy.
What are those people telling you, Dwight? I think you brought this up a couple of weeks ago, or maybe it was one of our private conversations.
Yeah.
The one borrower just absolutely in shock, obviously. Any of us would be, right? If you get 200 points swapped off your credit score.
Yeah. Well, I mean, they're very upset that they didn't see this was blind. It's not that they deny that they didn't owe a student loan, but there was so much confusion during the pandemic, right? During COVID. Remember, they froze all of the student loans. Then Biden came out and, every loan, every other loan, every third loan was forgiven. I don't know. And then all of a sudden they kicked back in January, and these people didn't even know that. And again, I'm not taking any responsibility away from them, but they're saying, hey, we didn't even know. Had I not been remotely looking at buying a house, I wouldn't even known this was on my credit right now.
Right. Boy, amazing. Yeah, that's a tough one. And that takes a long time to rebuild that also. Yeah, you feel for that. All right. Well, we got a lot of things to talk about in our topic this afternoon. Again, buy now, refi later, or wait. We're going to run through the numbers with you here momentarily. Let me tell you what happened in the stock market today. There's really no other way to say it. It was a bit of a sloppy session today. Things were, pretty good in the pre-market session. We had some blowout earnings numbers from Home Depot. Caterpillar got a big upgrade. These are real heavily weighted stocks in the Dow. Things look really good. Matter of fact, we hit a intraday all-time high on the Dow. It was in 207, but we closed at 44,922 with just a 10-point gain. So what we saw happen was the technology side, and this is what we've been warning about. You can wake up one day and all of a sudden the darlings of Wall Street, the tech names, the Nvidias, the Amazons, the Microsofts, etc., traders, the algorithms, or whoever you want to blame, go, yeah, you know what? They're overvalued, or there's this reason or that reason that it's wrong. And that's exactly what we experienced today. It was really a diverging market. It was, almost evenly split, almost 15 up, 15 down. I'm just glancing at the list. Looks like maybe 17 or so were up. But, you were led by Home Depot, $12.44 gain. Cory, I was thinking of you, and that report came out, once again, okay earnings numbers for the top line and the bottom line, but not the best guidance going forward. But the street kind of brushed that aside. What are you hearing from your clients right now, Cory, in regards to remodels? Home Depot saying, look, at a lot of people are going, for the reasons we're going to talk about, I can't move. So yeah, I'm going to go spend some money remodeling. But at the same time, back to Dwight's point, I don't know if I got a job. I don't know, a lot of uncertainty in my personal finances. So can I really go drop, whatever, $5,000, $10,000 for some things to remodel my home? So
Yeah, and more of the people I know are the contractor side of it. And I'll tell you, the contractors, I know contractors, and Dwight knows too, anywhere from house remodels up to very large stuff for municipalities. They're all busy. I don't know that they're as busy as they've were in the recent past. They're not stacked up, but they all have work into the near future. But as Dwight mentioned, you still got to get your hands on some cash somewhere, especially if you're worried about jobs. So we'll see how long that goes.
Dwight, are you seeing any requests? People come to you wanting to cash out to do remodels, things like that?
You're starting to get some buzz about it, not too much. Again, we're back to that, the home equity line still. We're still playing in that sandbox because they don't want to give up on these great rates. We started to get some momentum, as you know. We talked about it last week and the week before, and kind of petered out on that little momentum on the rates. So people are still not really ready to go give up their first. So it's still back to the home equity arena. Still back to the home equity. Yeah.
Okay. Very good. All right, we come back. I want to hit some of the movers, some of the weakness that we experienced, like with Meta and Google, Amazon, etc. We'll hit that real quick, NVIDIA. And Dwight is going to tell us what we did on the mortgage side of things today, and then we're going to get into our topic: buy now, refi later, or do you just wait? Let's turn it over to Kristen Snow in the Right Now Traffic Center. Welcome back to the Jon Sanchez Show on Newstalk 780 KOH with Cory Edge of Edge Realty and Dwight Millard of Highlands Mortgage. All right, once again, here's how we finished up. 10-point gain on the Dow. But it was a wild ride. I don't think it was quiet by any stretch of the imagination. We're up and down all over the board today. But yeah, finished with a very small gain of 44,922 level. Once again, we had an intraday record of 45,207. NASDAQ, though, never really recovered. Finished at the lows of the session down 315, a 1.46% loss, to close at 21,314. And the S&P giving up 38 points, or 0.59%, to a close of 6,411. All right, on the commodity side, the 8-cent decline on oil prices. That was a finish there of $61.40. And then we turn things over to the gold prices. $19.30 loss there, $3,358.90. And on the bond market, down 4 basis points on the 10-year to a close there of 4.3%. Mr. Millard, how the heck did we do on 30-year mortgages today?
Well, we're stuck in this rut or this mud right now, John. We're at 6.60 according to Mortgage News Daily. That's up a few ticks from basically last week. We were, I think, 6.58 or something. Your 15 years still under 6, 5.96, and then your governments are 6.18. So, we're just in this pattern. I mean, and it's what draws the people out. But then there's not a whole lot of movement beyond that, right? I mean, we started to see it. All the outlets, all the media was talking about rates coming down, and people go out, and then all of a sudden they just kind of stop.
Yep. I want to go back to what I was saying about that interview that was done on CNBC this morning with the real estate person. I forget what company he was with, but he brought up exactly what you were saying. I think it was Thursday. You and I and Cory were talking about this, where the public right now is waiting on the fence, using that term. They're sitting on the fence because they think, obviously, in September, we're going to get a rate cut. So if the Fed cuts rates 0.25%, then you're going to see mortgage rates cut a 0.25%. And he obviously said, just like us, look, the bond market, it was like deja vu. Exactly what we said on Thursday. The bond market, folks, remember, is a forward-looking indicator. The bond market is much smarter than the stock market, right? The bond market has already priced in a 0.25% cut from the Fed in September, and they've probably already priced in the probability of another rate cut, say in October or December. So, Dwight, I want you one more time, because I don't want anybody, and that's why we're talking about this topic, buy now, refi later, or wait. I don't want anybody to miss out on their dream home or whatever opportunity they see for themselves, thinking that you're going to see rates drop 0.25% when we get the Fed interest rate decision in mid-September. One more time, Dwight, tell the audience how they are not correlated.
Yeah. I mean, so to your point, I mean, the feds are moving the, federal fund rate, which is what banks charge each other overnight, or the feds charge the banks overnight funds. The bond traders manage the Fannie Mae, the Ginnie Mae, and, the market. So, it doesn't mean, and that's what everybody thinks. They lower a quarter. Hey, mortgage rates are going down a quarter. It's absolutely false. But everybody has that narrative, John. Everybody has that narrative. Unless you're listening to this show, good and well that doesn't. We've seen the Feds lower rates. And what do you think the mortgage rates have done? They've gone up. So, so there is absolutely zero correlation. So to wait for something that you just don't know is going to happen, or when it's going to happen. And then if that does happen, that your mortgage rates go down, it's a double whammy. I mean, I just don't know. I mean, I'm going to err to the side of you need to buy today and restructure later.
And that was his advice too.
Yeah.
It was like he heard everything you'd said. Yep, exactly. All right. Okay. So now we're up to date on the mortgage side of things real quickly. Some of the big movers today. Like I said, tech rolled over today. This is what pressured the market, obviously on the NASDAQ side, and kept a lid on the Dow side. NVIDIA, no reason, down $6.37, 3.5% loss. Broadcom down 3.5%, $10.85. Microsoft, $7.33 loss, down 1.42. Apple, small decline there, 33 cents. Intel was one of the big winners after SoftBank last night made a big announcement that they're going to put about $2 billion into the company. Now, remember, this is on top of the U.S. government wanting to kind of use our new sovereign wealth fund to take a stake that we still don't know is going to happen into Intel. So Intel's in the crosshairs of a lot of companies, but nice move on the stock today. 6.97% gain, up $1.65 to $25.31. We also saw pressure on Meta, an 89-cent loss, 2.07% to $751.48. Google was down $1.80. Tesla down $5.85. Amazon down $3.48. You get the picture. So what do you do now? One day is not enough. What we have to watch, could this be the beginning of a tech sell-off? If it is, it's time to start thinking about your defensive action, which in your defensive playbook for your portfolio. Tomorrow we could come in and it could be a different world. So one day you never want to adjust defensively when tech starts to sell off, but you have to sit up in your seat right now and pay very close attention. If we get 2 or 3 days, that's when we could potentially have some problems. I mean, this market is absolutely ripe for a 5 to 10% correction just because valuations are stretched, just because we just keep, as Dwight says, setting what, Dwight?
Another record-setting
after
day.
record.
Yeah.
That's right. Exactly. So I told you, I've been telling you for weeks, I get very nervous. Jason gets very nervous. Cory, Dwight, we all get very nervous when this market is at these all-time highs day after day after day. Again, that cannot continue forever. You got to take a breather. So just want to mention this. I don't like what I saw today, but again, one day is not the beginning of anything. But again, this is the old adage, it's the shot across the bow of the boat, and you just want to sit up and pay a little bit of attention. Good time to check your allocation, your 401k, your brokerage accounts, etc. Be on the phone with your financial advisor if you're not confident that he or she has you well diversified. Again, all part of the defensive playbook that you should have ready to go at any point. Cory, anything you want to add to that before we go to break?
Was just in watching some of this today, they're either, my take on it was they're either getting nervous for what could happen on Friday, or
Jackson
if they
Hole,
can,
yep.
Jackson Hole with Chairman Powell, or if they can get through that and still feel like you're going to see rate cuts in September. As you mentioned, this whole thing could be unwound back to all-time highs Friday
Absolutely.
afternoon or Monday morning. So
Absolutely.
that's what it felt like to me.
You bring up an excellent point, Cory, as always. And so, folks, we have the Jackson Hole Symposium. This is a gathering of economists, supposedly, but it's a who's who, right? Every CEO probably in America is going to be there, and anybody who is somebody is probably going to be there. And it's been a few years. Powell has never done this, right, Cory? I don't remember. Powell's never shocked the market. We of course, had Bernanke, I think, was the last one that kind of surprised the world.
Remember Powell 2 or 3 years ago when he said there will be pain, and then he started raising rates.
Oh,
and
you're right. You're right.
The market tanked on that.
Yeah, that was probably 2022, 2021.
22.
Yeah, right in there.
22.
You're right. Yep. So this is what Cory is saying. It's a great point. Market pays very close attention. Was speaking Friday morning, I think at 7:00 our time. The problem is they never let the cameras in there. So you never know what he's saying. History, again, like I said, Bernanke used to be really famous for dropping some bombs at Jackson Hole. Powell one time in his tenures. We will see. But again, this could be just another reason that people are a little hesitant, pulling a little money off the table. They don't want to be caught flat-footed if Powell does say something to spook the markets on Friday. But, again, way too soon to tell on that one. But those are just, some of the things, again, that posing a bit of headway. All right, when we come back, I can't wait. Let's get into our topic. Buy now, refi later, or do we just wait? We'll have the boys give us their advice on that. But first, let's get the advice from Mr. Ryan Nutter and news, traffic, and weather. Hey, Ryan. Welcome back to the Jon Sanchez Show on News Talk 70 KOH. That's right. Do not change your dial after this program is over, so you do get to listen to Mr. Nutter. What an incredible show this man has. Once again, a 10-point gain on the Dow today, a loss 315 on the NASDAQ, and a decline of 38 on the S&P. Of course, joined by Cory Edge of Edge Realty, Dwight Millard of Highlands Mortgage. All right, boys, let's get into our topic. Buy now, refi later, or do we wait? So here are the points I want to go over with you guys. Dwight, I'm going to start with you. Let's start talking about, we'll call it the payment math, right? Permanent rate versus 2-to-1 buy down versus seller's credit, points, etc. So a bunch of jargon that a lot of people don't understand. The bottom line is there are alternatives, right? So let's kind of look at this permanent rate, meaning, the fixed rate that you just went over, versus the 2-1 buy down. You touched on this a few weeks ago, and I think I wanted to bring this to the table again because a lot of people are not aware how that works. So cover that real quick.
Yeah. So the buy down, the 2-1, and there's actually a 3-2-1 as well, John. But a 2-1, what you're basically doing is you're buying down 2 percentage points the first year from what the market is, 1 percentage point from the second year from what the market is. So, for example, let's say your rate today is 6.5. You would buy down to 4.5 your first year, 5.5, then 6.5. It's a fantastic, I call it a gimmick. I haven't been a super big fan of them, but in the anticipation that people have about maybe the Fed's lowering the rates 12 months, 18 months, whatever it is, they could then likely maybe then convert out of that buy down into an over the counter rate cheaper. So the buy downs are, and I'm telling you right now, the builders are pushing them like crazy. This is the only way to get people's payments down.
I'm sorry, you broke up. Builders what?
The builders are paying this like crazy because it's the only way to get the
Dwight, you
payments
broke up.
down. The builders are paying this,
Okay.
John.
Okay. Why are you not a big fan? I'm sensing a bit of sarcasm. Why? I mean, if you go from 6.5 to 4.5 with 2 points down, where's the math? Where does it make sense?
Well, I mean, it makes sense because it gives you, but if it doesn't, so the people that did the 2-1 buy down 2 years ago are now at a higher rate than what they started at because the buy down didn't work. You see what I'm saying? That's why there's a little bit of a sour taste because some of these 2-1 buy downs are coming due now.
Okay. But if we're in a cycle where rates are projected to come down over the next couple of years,
then I like it.
I mean, we're in a different.
Then I like it.
Yeah, I was okay. That's what I was waiting for.
Yeah.
Because 2 years ago we were in the opposite environment. Back to what Cory said, 2022 is when the Fed started raising rates. Here we are a little over 2 years later, and different.
This is the single biggest tool. Yeah, this is the.
Okay. Is this helping people qualify? Because now are you qualifying them at, again, 6.5%? Are you qualifying them at 4.5% with a lower payment, or you got to qualify them at the 6.5?
So in the old days, you used to be able to qualify at the start rate. Right now, you got to qualify at the fully indexed rate. And the problem with that, John, is most cases you got to step up your final rate a little bit from what the going rate is because it's expensive to do the buy down. So let's just say rates are 6.5. You go to 6 3/4. You buy down to 4 3/4. So, but you have to qualify at the fully indexed rate. So it doesn't do you any good from a qualifying standpoint.
Cory, can you give me a seller's concession? I know we'll talk about those, but just a question that popped in my mind. Can you give me a seller concession to give me that 2 points to do the buy down for Dwight?
Yep. So there's every program, and Dwight knows it better than I do. Every program has a max amount seller concession, and I think some of them go up to 5 or 6% if you can get that out of somebody. So there's usually enough money to pay there. The offers, I did a property last week. We had multiple offers. It was in an area where buyers usually need help, and so every offer had a concession in there. And what I was told, at least from the agents, is they were all going to use it to buy the rate down. The other side of that 2-1 buy down, which there was a couple of articles on it, and then I haven't heard too much lately, is, as Dwight mentioned, not only did the 2-1 buy down from 2 years ago not work because now the rate you're getting now is higher than what you could have had, but these people are coming out of it. Now they're pressed for affordability, and the value of the house, if you're lucky, is the same. A lot of times it's down.
Okay.
And so it's creating
a mini
a little
version
bit
of
chaos.
2008 in the debacle there.
Yes.
Okay.
A very mini version, but there are some people feeling.
Okay.
And
all right,
John,
Dwight, so along that same point,
I was just saying, universally speaking, a 2-1 buy down's about 2.25 points cost buy down. So that, to Cory's point, when you got a resale and a seller, so it's a pretty decent cost to buy it down.
So put that in dollars and cents for those that don't understand what you just said as far as the points.
So if you're looking at a $400,000 loan amount, it's $10,000. 2.5 points is $10,000.
Yeah.
You're paying $10,000 to buy that rate down.
But do I care if Cory's my great agent and he just got me that $10,000 on the concession?
Absolutely not. You would never pay the buy down on your own if you're the buyer, because all you're doing is prepaying the savings.
Okay.
Never pay it.
Okay.
If you're the buyer, do not pay your own buy down. You're better off doing something different.
There you go. Okay. Now we're talking. All right. Now let's go to our second point. We use this a lot. You marry the house, you date the rate, right? When does this not work, Dwight? When does that scenario that we use over and over on this show, when does that not work?
I think if it's short term, if the house is short term, but if you're looking, and Cory's always said this, if you need housing and you need a roof over your head, eventually the rates will, there'll be an opportunity for you to, let's say, reconsider refinancing or pulling some cash out or doing something. So the rates are always moving more than they've ever moved, John, now. In the old days, it took forever, but they move so fluid right now that there's always an opportunity somewhere. But if you're short term, you may not be able to wait that out.
Okay. All right. Cory, anything you want to add to that?
I would just say, in the life of a house and the life of a loan, Dwight's spot on that you need housing, you need a roof over your head. You're going to go through refinances and payoffs, and now I need an equity line because my kids need to go to college, like all these things. So I'm not necessarily against the marry the house, date the rate, depending on life circumstances. My biggest thing is at the first outset when you buy it, make sure you can afford it.
Mm-hmm.
And that it's locked, and then it doesn't matter what happens because you know you can already afford it.
Right. Exactly. Something, guys, that it just came to mind, Cory, as you were saying that, thinking back to when we were all first time buyers, right? And it was a dream that, millions right now have, and they're so frustrated because, again, affordability and so on and so forth, that they can't get that first home. And thinking back again, first time that I got into real estate, I know you guys have shared your stories. Then, I'm going to sound old. Then I was like, I'm going to do whatever it takes to get into the house. I don't care if I'm paying, and I think 12% interest on my first home. I think Dwight, you guys have said the same thing. And look where we are today, right? Rates are half that. And God willing, most of us have made pretty good money in real estate over the years and so on and so forth. So why aren't we using that excuse anymore, Dwight? Why are we not telling these people, and Cory, you know what? I don't care what it takes. You go fancy 2-1 buy down, seller concession. You know what? No matter what, get into a home. Why is that? Why is no one saying that anymore?
I don't.
Cory,
I
start with
think
you.
Cory and I are saying
Or
it.
Dwight, go ahead.
When somebody, when I feel like there's a strong enough desire, they'll do anything. You're right, John. You just got to feel the appetite. And there are those out there. I'll do anything. I'll go get another job. I'll do whatever I've got to do to go raise some money. I'll ask my aunt, my uncle, and so those are the ones we really want to coach and get them in.
Cory,
I still, and I don't ever push people that way, but just going back to me, I think I bought my first house. I did my loan in 1998.
Mm-hmm.
The interest rate was 7.5% or 8%.
Mm-hmm.
My payment was $1,100.
Mm-hmm.
Now that house is probably worth $500,000. That payment's going to be $4 or $5 grand. I don't know. I mean, I'm sure wages have gone up, but they haven't gone up as much. To me, when I look back and just think about it, like it's much easier said than done, because could anybody shell out an extra $1,000? Sure. I mean,
I don't know. Now you're sounding old, so I'm gonna respectfully disagree with you, because again, just for those that may be new to the show, I'm just going to go back to my personal story. I was a credit analyst for GMAC, the financing arm at the time of General Motors. They were moving me all over the place. I got a promotion to move to Oxnard, California. Wanted to live by the beach, etc. Condo was $181,000. I was only making $32,000 a year as a credit analyst for GMAC. There was no way in hell I was going to qualify. So I'm like, what can I do? What can I do? I call my dad. Dad, how would you like to own a third of this condo? Oh, it's, growing town by the beach. Done. Go to my brother-in-law, who's a CPA. Bro, you want to come in third on this? Oh, he's a numbers guy. Absolutely. Great investment. I was willing to do. Because I couldn't afford it, I landscaped. I did landscape installation every single weekend for as long as I owned that house, which was a couple years, that condo for a couple years, because I needed that help to make that payment, right? I had a family to support. My point is, I don't see that desire with these young people that are trying to get into their house. It's easier to go ask Uncle Dwight or Uncle Cory for a loan or a gift or something like that. I don't see, and again, I'm going to sound old, I don't see this younger generation willing to sacrifice to do whatever it takes to get into their first home. And all I can tell you from personal standpoint is, folks, do whatever you have to do. If it means a second job, a third job, starting a business part-time, whatever it is you need to do, one of your greatest paths to wealth is home ownership. No matter what happens with you putting in your 401k, your greatest path to wealth is that home because of the leverage aspects. Dwight?
Yeah, no, John, you're up. I think that percentage is far less, John, than what we experience. There are some out there, but the easier route is what they take. They go get a loan from Uncle Cory or Uncle John. They just get a loan. They figure it out. They waddle through it and they get through it. But yeah, that hard work, do whatever it takes. Yeah, it's further between than it was.
Mm-hmm. Cory, you want to add anything to that?
No, I agree with you. I mean, Bravo, I agree with you on that point of it, that where there's a will, there's a way. And sometimes it doesn't appear to be a will.
Like when I had my brother, Dr. Dennis Sanchez, on the show on Mondays where we do the AI, we were talking off air yesterday. And folks, I can't tell you enough, especially you young people, there is never, ever, ever been a better time to go start a business than there is right now. You literally, and I'll help any of you young people, if you need my help, I'll give you my time. In an hour, I can have you up and running thanks to AI. I can have a business plan written. I can have pro formas. I can have your marketing plan. I can have everything written within an hour thanks to AI. And now you have to go do the hard work and get that business form. There is no reason, if you need to, if Dwight says, hey, you know what, you need to go qualify for another grand in income or a couple grand. There's no reason in today's world that you cannot go generate a couple grand, at least by taking advantage of where technology is now. Keep your 9-to-5 job. That's safe. You got your benefits, but don't tell me that you don't make enough money to qualify with Dwight, because there's no reason. There wasn't the internet. There wasn't any of this crap when The three of us were growing up and trying to get our first home, but all you young people, you've got it now. You've got it. It's just between your eyes and like in your ears, whether you have the desire and in your heart to go out and do it. So let's wrap it up with Kristen Snow right now, Traffic Center.
True.
Welcome back to the Jon Sanchez Show on News Talk 780 KOH. It's been so great to be with all of you today and great to be with my co-host, Mr. Edge. Can we get your phone number, Saul?
673-6700.
Mr. Millard.
240-2022.
Mr. Millard.
240-2022.
All right, boys, let's continue our discussion points and buy now, refi later, or do we wait, right? We talked about the rate buy down program, seller credits, marry the house, date the rate, so on and so forth. Now let's go to our next issue, which is, Cory, down your alley. This is what a lot of buyers are trying to battle with. New construction. Do I go new construction? Do I go resale? New construction, I get builder's incentive. Resale, I get resale concessions. How do you help somebody make that decision, Cory?
You know, after doing this for so long, and Dwight knows this, some buyers love new homes. I mean, that is their dream, is to have a brand new home, not just new to them, just new to any human being.
Right.
And some people like older homes that they can remodel.
Yep.
So that one's kind of up in the air. I will tell you, if you're just looking at a dollar for dollar, sometimes, not always, sometimes the new homes are a little bit more expensive.
Mm-hmm.
Obviously, you're getting new stuff. So you can factor that in. And then obviously you can take into consideration any buy downs and stuff that they give you. Just remember, especially with the new homes, and I love the new home builders, but you go into a huge community, they're going to wheel and deal with you to get you to buy. Next month, they're going to be wheeling and dealing with two other people to get them to buy. So that other person may get a better deal than you. They may get a worse deal than you. It's
Right.
hard to say. It fluctuates a lot. So
Square footage to square footage, same amenities of a house, Cory. Fast forward 5 years. The guy that bought the new house, the guy that bought the house that's already landscaped and everything else, where's our best appreciation potential?
theoretically, honestly, theoretically, it should be the same. But the person who bought the older house may have had to put more money into it, plumbing, electrical,
Right.
some stuff that needed to be done.
Okay.
So he may have higher expenses, even if they sell at the same price.
Beautiful. Great advice. All right, boys. Excellent job as always. Very, very interesting topic. We will continue it again at another time. In the meantime, we will see you all tomorrow. God bless. Have a great afternoon. See you, boys.